What do you say? Let's take a look at our grain market activity as it stands right now as we get closer to the noon hour on the trading floor in Chicago. And in fact, let's go to the trading floor in Chicago and find out why we have July corn up about 7 cents. It's trading at 4.02. Quite a run in the corn market. We even have December up 6 3/4 at 4.19 3/4 right now. So let's go check in with Scott Gecas and find out from his perspective what's going on. He is with Longleaf Trading. Scott, the traders behind you, I'm sure they're all abuzz today about the market action here going on in the ag commodity trade. What's the talk on the floor there?
Yeah, everything is due to, China and and the U.S. going back and forth with the trade talks. China reducing and scrapping the anti-dumping probe from the U.S. and sorghum. That lifted soybeans right off the bat. The thing that is driving corn right off the bat too is the world stock usage is the tightest it's been in about 45 years. That's very significant. I think that's one of the main reasons why you're seeing corn up so much. The dryness in China, heavy rain in South America, it's all driving, prices higher across the board.
Now, what about the thought that there are still some remaining areas in the U.S. that have not got their crop in the ground yet? Most of it's in the north and maybe the northwestern part of the belt. And they're getting some heavy rains, and they might have a hard time getting that rest of that crop put in.
Yeah, and that's one of the biggest catalysts as well. Same thing in South America, same with the heavy rains there. The heavy rains there are damaging crops. They're not being able to get the crops in the ground. And obviously, if they can't get the crops in the ground, they can't harvest them. So you're seeing that across in the north here as well.
I'm glad you brought that up. I was reading one article this morning that estimated that they may have lost, just in the last couple of weeks from heavy rain, maybe 750,000 acres of soybeans in Argentina alone. Is that right?
Yeah, that's exactly right. I was going to bring that point up exactly earlier. But yeah, the heavy rains there damaging their crops. The weather is definitely going to be a catalyst moving forward. The 6 to 10 day forecast is a little bit bullish, and you're seeing that today.
Let's look at the soybean trade, and we'll compare the futures to what the corn was doing. They're a lot more timid. We have July soybeans now trading 2 1/4 higher. We're at 9.97 1/4 on the day, so we're about a dime off of our overnight high. November new crop soybeans now 3 1/2 higher at 10.07 3/4. To dovetail with the talk that we were discussing about the heavy rains in Argentina, there is also a threatened labor strike starting this evening, right?
Right, exactly. That labor strike, the weather in South America, everything's pointing to higher prices across the board in grains. The stronger U.S. dollar is keeping that price off a little bit. You've seen soybeans spike a little bit overnight, and they came off as I was coming up today. They were only up about maybe a penny or two moving forward, but that big sell-off coming all the way down from 10.50 all the way below 10 even. Right now we're waffling back around 9.95, 9.90 or so, but 9.90 is definitely going to be a line in the sand for the soybean market.
Okay, let's look at the wheat trade. Big move in the wheat trade today as well. And even though the export sales haven't been that great, it sounds like worldwide the wheat production news is suddenly turning much more bullish this week. July Chicago wheat 15 1/2 higher at 5.13. In Kansas City wheat, we have the July contract sharply higher. It's up by 14 1/2 at 5.33 1/2. Even in Minneapolis, we have the July wheat there trading higher today. Tell me about this wheat market here. Is it finally going to be able to break away from the recent contract lows that we've been looking at here recently?
Yeah, due to all the weather that's coming in across worldwide, definitely putting a bullish catalyst for the wheat market. You're seeing that big run up today. I think it's going to continue going into next week as well.
Okay, we'll come back in just a moment and we'll examine what's going on in that livestock trade. We'll take a look at some of the outside markets too. We're talking with Scott Gecas. We'll be right back. Well, we're back with you. I wanted to touch on the cotton market, which is a story unto itself here today. It has had big gains early today. And as we look at our cotton prices, July roaring ahead by 143 points today at 86.46 cents per pound. It actually is off of its high, believe it or not, by about 115 points. got as high as 87.60. We have December cotton now 84 points higher at 82.29. What a performance in the cotton trade today. Now on the livestock side of things, let's take a look at live cattle and go to the futures board here. We currently have June now up just 7 cents at 103.12. August down a dime, excuse me, at $99 even. October up 8 at 102.38. So narrowly mixed here on the cattle market. Let's go back to Scott Gecas of Longleaf Trading in Chicago. And what do you think of that, where the market really got quiet here?
Yeah, after the last 3 days in the cattle market, you're seeing very heavy selling pressure. I think it's a little bit overdone now. You're starting to see some little bit of a balance here. Above 102, you're going to be a little bit more bullish. Above 104, you're going to be very bullish. You know, the cash to the future is narrowing as of today. You know, but that 3-day collapse is definitely putting a dent in that whole technical chart. So we're going to see how that plays out around that 102 level.
On the beef cutout values that came out at midday, they were kind of mixed, didn't do much of anything. It looks like we had choice cuts, maybe losing about 6 cents in value today. And the select cuts actually gained about 42 cents, so not a lot of takeaway from there. Cash market, though, definitely drifting lower as we go, isn't it?
Oh, yeah, the cash market is definitely leading the whole market in general. That basis is narrowing slightly. You know, you did mention the cutout value at midday today, but the cutout values that came out yesterday, they were highest since June of 27th last year. So that is supporting price a little bit, but as you can see, it's still waffling back and forth right now.
Okay, now on the feeder cattle side, I want to make sure we cover that base too. On the feeders, we currently have the nearby contract. That would be your May contract down 80. We have the August, though, down 45 at 138.28. Now, we had been higher on the day, and that's all kind of given up the ghost as we head toward the weekend here. September feeders are down 63 at 138.45. That was the market that had been leading the charge higher yesterday, and now today it's showing more declines than the live cattle. I wanted to ask you about the lean hog trade. What happened there on the lean hog futures today? We had some steep losses. Triple-digit losses on the lean hog board today. We have June down almost $2. We're down 198 at 74.50. July down 168 at 76.52. All the pork cutout values and primal cuts were lower today. What happened here as we head into the weekend? Is this related to China? Is this related to profit taking? What's up?
I think that's all due to China. For whatever reason, they're putting too much emphasis on this China deal. Again, you know, they do import a lot of pork, but not that much pork for this big of a drop. You know, we broke that 75 level. As you've seen, we broke that 75. You've seen a big spike in volume, a little bit of follow through, and it's definitely trending lower, and that's what it's considering that technical break, and that's why you're seeing, you know, the big.
Okay, it sounds like we may have lost our audio feed, but it kind of has that appearance that maybe it has actually tripped a few sell stops on the way down. And it just has that appearance. It's kind of got that snowball effect going on.